Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So there are some red arrows around the world as the correction continues, although our futures are slightly positive this morning. Some headlines attributing that to Home Depot's decent results. Home Depot is up about 3.2% this morning, as well as the oversold nature of the market.
Yeah, we closed yesterday pretty much on the lows, but in no man's land. You know, we're oversold, but I think closing under the 50-day and above the 100-day had some traders cover their shorts, but not really getting a buy signal yet. So coming in today, I think a lot of traders, including myself, would have liked to have seen a down open, have us follow the overseas markets to, create a little fear to make it buyable. If you look at the chart of the SPX, you will see, here is that head and shoulders top that we went over many different times. Here is that spot to reduce risk, right around 1698, and then another spot to get net short perhaps. And here's where we are. So below the 50-day, but above the 100-day, above this trend line. So kind of like a little bit of no man's land. So anyway, we are up a little bit. If we hold above 1645, perhaps we try and reclaim the 50-day and retrace a little bit. But overall, it does feel like at some point we might be testing this trend line. But, for today in August, if they could hold above 1645, let's see if perhaps we could see a move back to maybe the 1670s.
And rates seem to be backing off this morning, and TBTs closed very overbought yesterday and are slightly down this morning. So perhaps a pullback in rates could give our market that oversold bounce.
Well, that's what we were talking about on the VTF on the close yesterday. I'm like, if you missed the last 5 buy prices in the TBTs, I would not be starting a new buy today. And then we were also saying that if we see a pullback in rates, which is probably some of the reasons why the equities have been so soft, that means a pullback in the TBTs. Maybe, we could see that. And I think some guys went out actually short for a cute short, the TBTs, where if you look, how extended they are. This is when they broke above 70. Here's where it consolidated, and here was your quick move to 82.75, extended from all the moving averages. I'd rather see you buy it on the 21-day moving average versus chasing it. So if we get a pullback in the TBTs to the 80 area, I think that'll help the equity market bounce. Same thing goes for the TLTs. That's very oversold. A spot to short it was 124 or 116, or when it broke 110. So down here, maybe get some type of reflex move back to 104 to 106. So even in the thesis, when you have rates rising, your entries and exits matter along those ranges to stay involved.
And meanwhile, select groups of stocks continue to show strength in this market. Facebook's been showing a lot of relative strength and was even upgraded after the close yesterday.
Yes, this one, broke above the cup and handle pattern on earnings. It's been, consolidating, but hanging out with a little corrective nature. But if you look all in all, what a move it's had since earnings, and look how it's consolidated above the 21-day, wedging again. I'm actually long some of this, and if this were to get above, just say 37, what is this, like 38 and a half, we could be seeing 40 plus sooner than later. I think that this stock is showing its face right now, that during this corrective activity, it's very strong, and it could help lead the next move in the fall.
And meanwhile, Apple has, of course, been showing a lot of relative strength as well. Did see a downgrade from S&P Capital IQ to buy from Strong Buy. That analyst has a price target of about $550, so still some room to go.
Yes, but it might not be today. You might need to consolidate. We just had a big move in Apple. If you look at the chart here, you'll see that ever since that earnings right around here, when it broke above the downtrend, it's been a very powerful move. Last time it got going again was above the 200-day. Here was your Carl Icahn news, and there it is. So you take a close look here. I just think it needs a little bit of time. So a little bit of time means maybe you pull back towards 500. Go sideways again before making new highs. But I will say that yesterday's high of 513.74, in my humble opinion, is not going to be the high of what just took place here over the next few weeks.
And Tesla up about 2.1% after a positive report this morning, also helping to lift the stock.
With these high valuation stocks, you have to watch the trend. You can't listen to the naysayers, the fearmongers, the valuation guys. You have to say, okay, we have a strong trend. You look at the chart, you look at the stock. It hasn't broken below the 21-day. Here's where it tested. This was one day it broke below on Goldman Sachs's downgrade and then reclaimed it with a red dog reversal. Yes, we filled the gap on that earnings day, but ultimately, what do we do? Held the 21-day, bounced off it, opening right around here. That's about $10 from there in a down tape. So this stock is still flexing its muscles. You still have to stick with that trend.
And meanwhile, the banks and JP Morgan continue to be in the headlines. JP Morgan has been leading the market lower. Where would you say it might be buyable on this weekness?
Well, what was interesting yesterday, everyone was saying, oh, let's just start buying the banks. And the banks were really where the relative weakness was yesterday. So I don't like just buying because it hits a spot. I like to see a signal. And JP Morgan's been in, the front and center with the reason for the weakness. And this was one of your spots to get out when it broke 56. Here, wide range bar, it's already at the 100-day, so it's showing relative weakness to most sectors. So, maybe it tries to bounce a little bit, but if we do get more weakness through the end of August, September, this could see the 200-day, and the 200 days down to 49. If you want to tactically approach it today, look at a red dog reversal with 51.80 as that pivot right there. This is a pretty big trend line. Let's see how it handles this, and then we'll know how to approach it in the coming days.
All right, and we'll be talking about all of this and more in the full morning call, so stay with us.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.